Welcome to you all of you to our YouTube channel CSNSR. I'm speaking as Stella from the CSNSR. Today we are going to talk about a very interesting topic, our corporate sustainability and ESG. And also today our guest is CA Rakesh Kumar Singh sir. So just a normal brief introduce, I was to tell you about a CA Rakesh Kumar sir that he's having a with over a 20 years experience, a CA Rakesh Kumar Singh, and he's worked in uh, telecom and digital industry, leading a financial big project and technology transformation. So it's our pleasure to welcome a CA Rakesh Kumar Singh sir. Thank you so much for joining us and giving your valuable time to us. Before I begin, I request you to all of you those who are watching us to subscribe our YouTube channel and do not forget to like and share and comment this video. Now, I request you to see Rakesh Kumar sir to share the thoughts of the today topic.
Okay, thank you, Stella. So, to start with, let me walk through of this PPT on sustainability reporting and the evolving ESG disclosure landscape. Let us examine the global framework that are shaping sustainability disclosure, namely the IFRS Sustainability Disclosure Standards S1 and S2 and Standard Responsibility and Sustainability Report BRSR. So, today, the investor don't only look at the financial statement, don't only look at the financial metrics of any organizations. They have gone further. They have gone beyond that. They also want to know in advance the risk associated with any business, the risk is associated with any industry, and those needs to be forecasted and reported in advance by the stakeholders and to be disclosed in front of all the investors. So BRSR driven by SEBI. There is GRI, the Global Reporting Initiative, the which is internationally recognized, and the SASB, the Sustainability Accounting Standard Board, and TCFD, the Task Force on Climate-Related Financial Disclosure. These standards collectively form the foundation for transparent, comparable, and decision-useful sustainability information. As regulatory expectations rise and investor demand evolve, it has become imperative for organizations to align their reporting practice and globally accepted norms while ensuring compliance with India's emerging ESG ecosystems. So this presentation aims to provide a comprehensive understanding of the requirement, best practices, challenges, and opportunities associated with robust ESG reporting. Moving ahead. The next slide. So start with IFRS Sustainability Disclosure Standards S1 and S2 overview. Though IFRS Sustainability Disclosure Standard S1 is related with general sustainability and S2 is for climate related disclosures. Though this has not yet been mandated, but these are attempted by all the listed organizations all across the globe. So S1 scope is to general disclose requirements for sustainability related financial statement information to meet sustainability. Any business, the only important point is going concern. Whether we go through daily news that lot of startups are getting failed, and most of the startups are financed by the investors. So IFRS Sustainability Disclosure Standards S1 and S2 overview. The S1 for general sustainability and S2 for climate related disclosures. Uh, Today's investors, they want the non-financial metrics to be reported and disclosed to them. And it's not only disclosed, they need to understand those non-financial metrics in a layman terms so that the risks are known to them in advance. S1 scope is to generally disclose general disclosure requirement for sustainability related financial information to meet investor decision needs. However, S2 scope is to focus climate related disclosures including risk, impact and governance. The objective of the sustainability report is to enhance comparability and reliability of ESG data globally. ESG here means economic, social and governance. The benefit of these reportings are the benefits are to streamline reporting practice worldwide and brings transparency to sustainability, impact and risk. Why this is important for any investors? Investor value provides because it provides decision useful ESG useful ESG information aligned with investor needs globally. If this report is to be taken, then other institutions like GRI, SASB, TCFD, and national regimes such as SEBI's BRSR is further working on this. Moving ahead. So India has already adopted this sustainability report, and SEBI is driving that compliance. The business responsibility and sustainability report driven by SEBI, which was adopted in May 2021, and phase by phase adoption by all the listed organizations are being taking place of the BRSR, which are driven through SEBI. So this is a mandated disclosure of ESG performance for listed companies in India. I will show you some of the formats how the companies are reporting the ESG matrices. This the BRSR has replaced earlier business responsibility report with broader sustainability focus. The BRSR report aligns companies with responsibility business conduct pipelines. Moving ahead, the BRSR ESG disclosure categories for investor companies. So, structure BRSR reporting across environment, social, and governance for clear sustainability assessments. So, large companies has already started reporting. I have seen the reports of last quarter, which was reported by Infosys, Tata Consultancy, Reliance Industries, Mahindra and Mahindra, Britannia, IOCL, Vedanta, UPL, LTI, Mindtree. So, Infosys says that ESG or BSR reporting and for financial year 24-25, they already include all the matrices of sustainability report, and they have already adopted the formats driven by SEBI. Similarly, Tata Consultancy and other big industries, but the other big organizations has already provided their reports in the quarterly reports. ESG basically environment. What metrics should be considered in environments? Environment. Environmental, we can see the resource management, energy, water, material efficiency, which are being used by any industries. Emission, GHG reporting, air and water emissions. How we are coping up with the environment. Waste and pollution, hazardous and non-hazardous management. How whether we are complying with hazardous and non-hazardous management as per the state rules and regulations, and similarly if complying or non-complying, whether those disclosures are already coming up in the ESG reports. Similarly, when we go for the social, the matrices includes the employee welfare related to health, safety, diversity, training. Similarly, the community development, the local investment, stakeholders engagement, the human rights, supply chain due diligence, and the governance matrix include the all regulatory requirement which is related with the processes, which is related with the board meeting, which is related with the key managerial persons. So it includes board compositions like what is the ratio of independence, diversity, skills. Similarly, ethical practices, anti-corruption, compliance systems, risk and audit, internal control and audit oversights, disclosure and governance, reporting policies and oversights. So the objective behind all this reporting remains such going concern. The organization needs to run in a longer visions. Moving ahead, the guidelines of responsible business conduct, NGRBC. Business responsibility and sustainability reporting further have their complete details, which includes their purpose, the alignment, the applications, outcomes, practical use. So, and if we move ahead on the global reporting standards, then the GRI is there, the Global Reporting Initiative. Similarly, TCFD, the Task Force on Climate Related Financial Disclosures. They are the institutions who are all these institutions are working closely so that uniformity in the reportings are maintained at global standard basis. Similarly, the SASB, Sustainability Accounting Standard Board, is aligned with S1 and S2 of IFRS. So this is the way the reporting are being done and moved, and the compliances are being moved on. Aligning corporate reporting with UN SDG. So how reporting framework map company impact to global goals for investors. So we all know we are working in an environment where the market we look to sell our product is global. Means now there are multiple organizations who go globally. Now we are not limiting our operations only within the radius of a single country. We are trying to explore all the avenues in the global markets. So to have a reporting standards, the corporate reporting needs to be aligned with all the other rules, regulation, laws, so that there are minimum hassles when you are going multi country operations. You should not be busy with your reporting compliance. You should not be busy with throughout the year with meeting the compliance standards, but you need to focus on the business. So all the institutions reporting standards, they are trying their best to make the reporting standards uniform to have lesser hassles to the organizations. The G, the GRI initiative, Global Reporting Initiative Framework Overview. The scope of GRI is to is the global framework for reporting impact on economy, environment, and social and society. The focus is to detail guidelines across ESG topics to promote transparency. So all the institutions are trying their best and trying to benchmark also with other countries' reporting standards, and coming up with a uniform uniformity in the reporting so that it can be easily be adapted by all the multi-country operator organizations. And the uses of GRI is widely adopted by global companies to communicate sustainability performance. Similarly, there is a coherent relationship between TCFD, SASB, IFRS S1 and S2, and in India, obviously BRSR by SEBI. Moving ahead, SASB industry focused investor ready ESG standards that translate sector specific sustainability issues into financially material disclosure for investors. So SASB sustainability managed by SEBI. So the industries specific industries report the requirement as per at which comply with their sectors, which is applicable to their sectors. ESG highlight. In the next slide, you can see reporting matrix, how the ESG is being reported. This is ESG highlights of Infosys 2024-25. So environment, social, and governance. You can check which are the parameters, which are the matrices which are included in this reporting, the ESG reporting. This is important. So these are in environment, they have captured the matrices which are related to environment. Similarly, in social, which they have captured the matrices which is related to social. And governance, they have captured the matrices which is related to governance. So the format which is being provided by SEBI through BSSR is not exhaustive, it is inclusive. You can give further reports from your side if it is for the interest of the investors, if it really mean to the investors and important for them. Next is TSE TC TCFD four pillars for climate related financial disclosures. TCFD is basically the task force on climate related financial disclosures. First one is governance, board oversight of climate related risk and opportunities that needs to be mentioned in the report, that needs to come out in the report, so that whosoever is related or whosoever is reader of those reports, they can easily understand the impact. Similarly, the risk management process to identify and access climate risk, integration of climate risk into overall risk frameworks, the strategy behind it, the climate impact on business strategy and cash flows, consideration of transactions and physical, and similarly the metrics and targets that needs to be come out in the sustainability report of any organizations. Next is ESG as a compliance and regulatory driver in India. ESG is not only a compliance, ESG force any organizations to do a deep dive in terms of fulfilling the compliance requirement of the country, in terms of moving ahead the business as a going concern. SEBI BRSR mandates enhanced ESG disclosure for listed entities. The government policies push ESG to meet national sustainability goals. Similarly, regulatory alignment needed with global framework like IFRS S1 and S2, GRI, SASB, TCFD. So SEBI has already aligned the requirement of BRSR with IFRS S1 and S2 so that the maintains a uniformity. And companies face scrutiny to embed ESG in governance, reporting, and access to capital market. So the practical outcome of this regulatory requirement is stronger investor confidence and improved market access. This is the most important part. Obviously, the investor needs to have faith. The investor needs to have that confidence that the money which they have invested in any organizations are safe and that is going to run in a longer durations. So, Nifty 50 top 12 by market cap with BSR SR ESG report. All these organizations like Reliance, SDFC, Bharti, TCS, ICICI, State Bank of India, they have already started reporting BRSR and ESG report. All 12 companies publish BRSR ESG sustainability disclosure in their investors sustainability pages. Moving ahead, the India's National Sustainability Reporting Focus and Framework. SEBI BRSR, NGRBC, National Guidelines Aligning Corporate Conduct with India's Environment and Development Goals, Voluntary Disclosures, National Initiative, Complement Global Framework, IFRS S1, S2, GRI, SASB, and Outcome, Stronger ESG Compliance Culture and Alignment with India's Development and Environmental Objective. Moving ahead, the greenhouse gas GHG emission reporting, which is why this is needed by investors and what they require from this report. So GHG emission directly influence revenue, margin, capex strategy, risk and valuation. Investor now treat carbon as a financial matrix, not just an environmental one. So investors are keen to know the the that how the carbons are being used by any organizations. The components of GHG will be direct as well as energy indirect in scope 2. Similarly, in scope 3, other indirect measurement and verifications. Standard and framework, IFRS S1, S2, GRI, SASB, and TCFD. Obviously, all these institutions are working to report on the greenhouse gas emission requirements. A regulatory context, investor significance, and best practices are mentioned. We can go through it. In the next slide, I will again show you with example of HUL, Hindustan Unilever Limited, how they have reported their KPIs, their matrices on ESG, the environment, social, and governance. So this is the way the KPI looks. These figures are publicly available publicly available on any of the financial sites. You can go through it so that you will get the flavor of the theory as well as practical. What is ESG? What is the sustainability report, and how they are being reported by all the listed organizations, the big listed organizations, because now this has become mandatory and regulated by SEBI, and also this is very interesting topic for any of the investors. So this has become important. Moving ahead, ESG reporting challenges and opportunities for Indian companies. Obviously, when there is a new regulation, when there is a new requirement, the challenges also come with them. But however, those challenges are getting mitigated gradually and getting minimized on a regular basis. So some of the challenges are data gaps, the limited expertise in all these reporting systems, similarly lack of standardizations. But however, all the institutions are working together like GRI, SASB, TCFD, BRSR, and IFRS. They are working together to standardize and maintain the uniformity in the format. Regulatory compliance pressures are there, opportunities are also there, and similarly, we need to take actions by mitigating all these challenges. Moving ahead, case studies of effective ESG reporting. Case studies of effective ESG reporting, the practical principles that drive credible sustainability disclosure. Some of the points are leadership commitment, stakeholders engagement, aligned matrices, transparent narrative reporting, BRSR by SEBI. This we have already gone through all this requirement in our previous slides. So moving ahead, the global ESG reporting adoption trends. How these reportings, how this new requirement, how these new regulations are being adopted, accommodated by the industries, by the corporation, by the organizations, irrespective of their size or sectors. Higher disclosure in developed market, emerging economies, evolving framework. So developed market had already adapted this, and all the matrices are being disclosed in their financial reporting formats. Regulatory drivers, IFRS S1 and S2, SEBI BRSR mandate influence reporting scopes. So there are regulators who are keeping lens on each and every industry, each and every organization, whether all these reportings are being done or not. ESG has compliance and investor requirement, benchmarking, risk identification. So the key standards GRI, SASB, and TCFD guideline disclosure and compliance. So there is a lens, means there is a regulator who is on behind these organizations, and they have also given them a uniform format where they can report this, so that these are easily understandable by any of the layman or the end user of the financial reports of any organization. Not only the investors, there are other stakeholders also who are who has a vested interest in the companies, and they also want to go through all these reports for a forecasting of better trends of these organizations. Moving ahead, sustainability accounting practices. Integrating ESG with finance to improve risk assessment, resource allocations, and long-term value. Now they are trying to quantify this non-quantifiable reports. They are trying to align these reports with the financial matrix, means how they are going to influence the financial matrices, and that is also very important. How this is going to impact the profitability, how this is going to impact the revenues, how this is going to impact the cost. So this alignment is very much important. So that also has already got started, and that is also being done by all the organizations. How investor and analyst use ESG report. They use ESG report to evaluate non-financial risk, access governance, quality and management, rely on transparent comparable disclosure, integrate ESG data into portfolio risk management, use report to drive engagement strategies, and applies to framework like IFRS S1 S2 BRSR. Moving ahead, the benefits of robust sustainability reporting. Obviously, when all these institutions, all these regulators are working for these regulations, and they also mandate each and every industry to comply all these regulations or compliances. Then the logic behind this requirement is to give some benefit to the organization, to give some benefit to the investor, to give some benefit to the industry as a whole, the society as a whole. So the key benefits are early risk mitigations, stronger reputations, and stakeholder trust. Similarly, this attracts sustainable investment, uncovers innovation opportunities, enhance competitive advantage, and support regulatory alignment. These are the benefits of robust sustainability reporting in this particular matrices. Common challenges in implementing sustainability standards. Obviously, when the new regulation comes, the challenges also comes, but those challenges are being mitigated. So inconsistent data is a common challenge. Resource constraint is a common challenge. Lack of standard frameworks. The regulators are already working to maintain the uniformity. Similarly, limited internal expertise, that is also important, and evolving regulations. So these are the common challenges, but however the challenges are being mitigated gradually, and even the regulators are very supportive in mitigating all these challenges. Moving ahead, best practices for accurate ESG reporting. Some of the best practices are already mentioned here. So industry can use these best practices so that the reporting standards becomes easy for them. So we need to adapt the best practices from all the global standards. Similarly, the other countries are also adapting the best standards of the Indian BRSR. So the interexchange are being already done. This is just to make our reporting standards easier and understandable. Next is the future outlook. The future outlook evaluation of sustainability reporting framework, standardization, digital integration, and impact measurement shaping global and Indian specific ESG disclosures. So these are the future outlook. We can go through it. Moving ahead, way forward for Indian regulators and compliance. What is the way forwards? The way forward is obviously the objective behind way forward is to strengthen reporting, align with global standards, and embed ESG across strategies. So these are the way forwards which industry as well as regulator needs to move ahead with to make the reporting more easier and make the reporting more simple. Moving ahead, the next slide. Integrating ESG into strategy in integrating ESG into strategy and governance. We already have gone through this earlier also. The non-quantifiable, the non-financial metrics are now being integrated with the financial metrics to check the impact and to embed sustainability for accountability, performance, and long-term value. Summary and key takeaways. Why IFRS S1 and S2, SEBI BRSR, and global standards matter for Indian firms. ESG adoption increase transparency, support investors, decision making, and align firms. Similarly, IFRS S1 and S2 set global baseline for sustainability and climate related disclosure, and which has already been adopted by Indian regulators. SEBI BRSR mandates enhanced disclosure for Indian listed Indian entities, which is very much required and which is a very much of interest for any international investors as well as the other stakeholders of that organizations. So this was the PPT on sustainability report, which has already been adopted by most of the Indian listed organizations. And if you really want to understand the depth of this regulatory requirements and what is the uses, please go through and read the reports which are published by top 5 industries. Thank you very much.
Such a wonderful you explain, sir, and very well, like the ESG reports and also the common challenges which you said about that, like deeply information. Hope those are watching they understood very well. And if there will be any query or the questions, so you guys can ask the question in our comment section, and definitely we will reply you. So thank you so much, sir, Rakesh sir, to giving your valuable time to us and joining us today. Thank you, sir.
Thank you, Stella. Thank you very much. Thank you, CS Ansar.